Hi guys, it's KCFX. Today I want to show us how I set my stop losses and how I set my take profits as well. Okay, so and also I'm also going to be showing us how Fibonacci retracement tool. Okay, you can see it here. Okay, on this Euro NZD right now. Okay, you can see we have the 0.786, 0.61, 618, 0.5, 0.382. Okay, and minus 0.2.72, and also minus 0.618. Okay, all these parameters which I put in. Okay, there are more numbers. Okay, but these are only this 6 is what I need. Okay, so I believe we also be wondering, I'm using the Fibonacci retracement tool, but you don't know how I set it up. Okay, the parameters is there, but you guys want to also set same thing, because that's what I want. Okay, I want us to set the same parameters on your Fibonacci retracement tool. I want it to look the same as mine, so that you'll be on the same page with me. Okay, so that everything should align. Okay, so I'm going to go right now. I'm going to show us, okay, the Fibonacci retracement tool. This is how it looks like. Okay, this is what you will need to do on your Fibonacci retracement tool. Okay, if you have your trading view, okay, bring out your Fibonacci retracement tool. Okay, okay, I'm gonna take this out so I can start again. Okay, now you go to your Fibonacci retracement tool. Remember, higher high situation and uptrend. Okay, we need to be drawing our we need to be drawing our Fibonacci retracement tool from the break of structure down to the change of character, because it's in a higher high and it's an uptrend market. Okay, so we take here, that's the high of this market structure. Okay, then drag it down to the change of character. Okay, the low of that. Okay, okay, so now we have our retracement tool. Okay, right, so now we want I want to now show you how it's going to be. Okay, when you draw your Fibonacci retracement tool this way, okay, you need to click on the Fibonacci retracement tool, right click on it, go to settings, go to styles. Okay, then exactly what you see here, you do the same. Okay, you mark this, you unmark this, you know, all this, you do it as it is. The ones which are meant to be unmarked, you mark. The ones which are meant not to be marked, you don't mark. Okay, you do it like this. Okay, when it's set up like this with the colors, or you can pick colors you want or use mine, it's still fine. Okay, so this is just the whole parameters which I use and how it's set. Okay, you can use this to draw whether it's a uptrend market or a downtrend market. Okay, so that's that, guys, for the parameters, the settings for the Fibonacci retracement tool. Okay, so now I'm going to go ahead to explain to us how I set my take profits and how I set my TPs, take profits and stop losses. Okay, this is how I set it, and also I'm also going to explain reasons why I set my take profits like this, and why I put my stop losses like this, and why sometimes the stop losses are wide and sometimes are tight. All this I'm going to explain in this session. Okay, so try to watch to the end so that you can get something out of this video. Okay, Fibonacci retracement is very, very important, okay, in me taking profits and also taking stop losses. Okay, but I defined the means of how I can use to calculate. Okay, there's little maths in trading too, but just very little. Okay, to just calculate some math things to know what the market where the market will need to go to. Okay, I'm going to show you how I did that, how I used to do that. Okay, for taking for my TPs, how I set it. I do some small maths, some very little small maths to enable me get my TP1, TP2, TP3, or I call TP3 open too. Okay, we can use TP3 for trailing stop. Okay, TP1 is always very accurate. That's if the market really wants to go there. Okay, if the market is going to go to that side, it's going to go towards the TP1. It might not smash it, but as I always say, we don't wait for market to smash your TP1. When you see you are 2 or 3 pips away from TP1 being smashed, you take it. Okay, you don't wait, right? Okay, so let's move on. Okay, so let's see. Okay, now UNZ. No, I'm not using. I'm going to be using EURJPY. Okay, we've been working on this pair for close to, it's going to 3 months now, right? We've been on EURJPY and GBPJPY for a while now. Okay, and it's been giving us good readings. Okay, and we've been taking profits from there. Even if we took some loss, that's just a loss last week from one of the JPY pairs. That's the GJ, right? Yeah, GJ. That's the GBPJPY pair. Okay, but we're able to get profits from this pairs really for this month which has passed. Okay, so guys, so now I'm going to explain to us how I do take profits, how I set my TP1 and TP2, and also my stop losses. Okay, and also there's what I call the PS. Okay, that's my psychological stop loss, or PSL. Okay, psychological stop loss. All right, I'm going to define my PSL, psychological stop loss, as an area, okay, a stop loss where if the market comes to, okay, and hits it, okay, like take us out, that's the stop loss, the PSL, right? If it gets to that level and breaks it, it means that the market really wants to keep on going higher above after being stopped out from a PSL zone or area. Okay, so that's a definition of the PSL, the psychological stop loss. That's how I call it. Okay, moving on. Right. All right. Let's see. Now I'm going to use an example of last week loss. I was on Friday. No, on Thursday. Yeah, Thursday to Friday. Thursday night. Now, guys, let me take out this once so we can do it all over again from scratch. Okay, let's see, guys. Now, last week, remember this pair. Okay, let's see. This pair is an uptrend pair, and anytime it's an uptrend market, right? An uptrend market means we are seeing higher highs, right, and higher lows, right? It means the market would want to see selling positions in this market. That's the initial plan, okay, to sell this market, because when you see an uptrend market, we're looking to sell the market, so we want to be selling this market. Okay, so now EURJPY. Okay, so on the EURJPY, last week Thursday, right? And remember, because we're looking to sell this market, okay, continuation means so. It means we want to be selling. And remember, I say we need to be seeing two confirmation. We need to be seeing a C1, a C2, or a C3 or a C4 for us to see more downside of the market. Now, on a C1, right, C1 and C2, all right, means the market wants to go down. So we are supposed to be taking our entry, right, because C1 means the market wants to go down. We saw a C2 which finished, that's the 4 hours candle. Remember, we are always using 4 hours as our setup plan. Okay, we use the 4 hours time frame to set up our pairs, our market, right? Now on the C1, we saw a wick above and a bearish body and a shorter wick below. That's a valid candlestick formation. That's C1. So the next 4 hours candle finished, which we saw a longer wick, right, on top, and a bearish body and a shorter wick below. That's a C2, meaning the market wants to go down. So here we will be taking our we'll take an entry from this level. Okay, from here we'll start taking an entry from here down to this end, right? We're looking to take an entry from here down to the end. Okay, from this level down to the downside, right? So now I'm going to explain to us how I was able to set up my TP1, TP2, TP3 for this entry. Okay, so last week, I remember, I think on Tuesday or Wednesday, we took an entry and we also made profit from the EURJPY. Okay, we took an entry and we won this pair, this particular C1, C2 zone area, right? We made profits from this level. Okay, so now I'm going to show us now how I calculate and how I do the small mathematics to get our TP1, TP2, and also TP3. Now, the first thing you need to do, okay, after you've drawn the predefined take profit and stop loss. Okay, because remember, as I said, this is what we want. We want to see the market come down, right? We want to sell this market. So what we are looking at now, we need to look at the level of this. So what do we have here? Okay, we have if you look on the target on the TP, the initial, the predetermined or predefined TP from the start, right, which we've set from the beginning, we have target 7.215. we have 4.50%. So that's the overall TP which we want to be collecting from the market or gaining from the market. That's our overall profit, which if the market goes there, that's what we'll be earning. Okay, 4.50%. So now I'm going to show you how I calculate and get my TP1, TP2, and also TP3. So let's go to calculator. Okay, now this is the calculator here. Okay, now we have here 4.50, right? At 4.50%. So what I do is on my calculator I put in 4.50, right? Now I'm going to divide this into 4 places. Okay, so that's how I do it. So I divide this times 2, divide this by, then we have 2.25. I times it again by 2. Okay, I times it again by 2. Again, I times it again by 2. Okay, so now we have 0.28. So that's the percentage of the TP. This should be our TP2. Okay, after you've divided 4.50 in 4 places, the actual total you get should be 0.28. okay, 0.28, you're going to divide this into 1 time again, okay, which will give you 0.14. That's 0.28 divided by 2, you're going to get 0.14. So 0.14% will be our TP1, while the 0.28 will be our TP2. Okay, so that's the idea. Okay, 0.114 is going to be our TP1. Okay, I remember it's in percent. While 0.28 would be our TP2. Okay, the TP3 would be 0.5625. okay, that's going to be our TP3. Now I'm going to show it once more. Okay, so the initial profit is 4.50%, right? Now we divide this by 2, divided by 2, divided by 2, divided by, now this one, okay, should be our TP3. Okay, But the most important one I want us to understand, I want us to get this one straight, okay? I want us to focus on TP1 and TP2. And that TP1 and TP2 is by dividing the predefined total, okay, right? Our profit in total, which is the 4.50, right? Now 4.50, I want us to just divide this 4.50, okay, divided by 4 times. I want it to be divided 4 times, all right? 2 in 4.50 4 times. That's going to give us our TP2 and our TP1. So now let's do that all over again. Now divided by 2, okay, that's 1, okay, divide again by 2, that's 2, divide again by 3, that's divide again, that's 3, divide again by 4, that's 0.28. So you divided the 4.50 in 4 times, right? So now what we have after we've divided 4.50 in 4 times, we get 0.28. So the 0.28 will be our TP2. While dividing the 0.28 into one place again, that will be 0.14. 0.14 plus 0.14, that's 0.28, right? So that's your TP1. 0.14 is going to be your TP1, while 0.28 is going to be your TP2. Okay, so I want us to focus on TP1 and TP2. At least that's the most important thing you should look at. Okay, so now let's go back to the chart. Now remember 0.28 is going to be our TP2, while 0.14 is going to be our TP1. Okay, our TP1. So now let's go to the chart and let's actualize it there, right? Okay, EURJPY, let's take it down to this level. Okay, so guys, remember C1, C2, both confirmation, our entry level will start from here, okay? This new candle here, okay? After the C2 value candlestick formation has finished, we start our next, okay, at this level here, okay? This level here, right? Okay, so now we are going to now short position because we are selling, remember. So now let's go. So now from here, okay, sorry, okay, so now our TP, okay, will be here, right? Our TP will start from the new candle, which is this candle here, okay? So now our TP1 is 0.14, right? So now if you see, you can see I'm reducing it. So you look at the percent, you can see on the target, you can see the percentage there, 0.73, right? We are looking for 0.14. That's going to be our TP1, remember. So now bring it up here to this side here. We're looking for 0.114, which is, yeah. So we're having 23 pips there, okay? That's 23 points, right? That's what we'll be getting for our TP1, okay? Now TP2, I'm going to clone this one, okay? I'm cloning this one, okay? The same level, okay? TP2 is 0.28, right? 0.14 plus 0.14, that's 0.28, right? That's now we're going to be bringing the target down. Look, watch the percentage. We want to see 0.28. 0.28 is now, that's almost 45 pips, okay? Now we have 45 pips there, right? Great. So now if you look well, you can see we've set up our TP1, right, which is here. Our TP1, this is our TP1, and this is our TP2. Okay, we're going to focus on these ones for now. So our TP1 is this one, okay, while our TP2 is this one, okay. Right, now we've now understood how we got our TP, how we can recognize how to get our TP1 and our TP2. Okay, I showed you how we got it, right? So now we're going to be going to stop loss. How do we set our stop losses? Now, the candlestick formation are very important, very important. Okay, now if you look at it, okay, you can see that we're having 0.55%. That's the stop loss. Okay, now to set our stop loss, okay, there's what I call the PSL, the psychological stop loss, and I have stop loss. Okay, now I have defined the PSL. Right now, the stop loss is of course where price gets to and saves us a lot of stress. Okay, where we can at least be okay even if we're minus start from our entry. Right, it saves us of our capital being exhausted and finished. Okay, that's another way of calling stop loss. Okay, it helps us from wiping our account out. All right, so what you do here now, we have, remember, we have C2, right, and we have C1 here. C2, we have C1, okay, and C2. Those are the two candlestick formation. So our stop losses, you will put it at the week of TP2. You put it at the week of C2, right? You can see this candlestick formation is the C2, right? You can see that's the C2. Okay, this is the C2. So you put your stop loss on top of the week of the C2 candlestick formation, this one. Okay, you put your stop loss here. Okay, that as well goes for the TP2. Okay, so your stop loss will be on top of the candlestick formation, this one. Okay, this particular one, C2, the second confirmation that allowed us to see a signal to push the market to the downside. Okay, so that's how to set your take profit and your stop loss, and that's how you do it on my strategy. Okay, this is how you set up your TP1, TP2, and also stop losses should be for both of them as well. And the stop loss must be above just a little, okay, on the continuation C2, right? Because of course we need to get two confirmation, a C1 and a C2. So you need to move your stop loss to the C2, right? And that's where it is here. Okay, right, great. So that's how you set up your stop loss and your take profit using my strategy. Okay, so guys, if you look at the market, you can see after C1 C2 candlestick formation finished, the next candle started going to the downside, which we saw profits, which you can see this candle started, and what happened, the market first came up here, and what happened, it hit our TP1, then what happened, it came back to our TP2 and smashed our TP2, and we won this trade. Okay, it was a wonderful, a successful one at that, a successful trade. Okay, so now I'm going to go to USD. I'm going to go to the GJ, that's the GBPJPY, to explain the PSL, because right here we saw a very clean move downwards. Okay, after the C2 candlestick formation finished, we saw the market going to where we wanted to go to, hitting our TP1 and TP2. So it was a boomer for us. We won this trade sharp. Okay, so on the GJ, I'm going to show us the example of the PSL which I was talking about. Okay, I'm going to explain that to us on the GJ, right? But this is a clear understanding of how to set your TP1 and also TP2, and also drawing your stop loss at the candlestick formation, the second candlestick formation that gave us that signal to sell this market. Okay, that's where your stop loss will always be. Okay, all right, so let's move to the GJ, which is the GBPJPY pair. Okay, so guys, let's look at this. Let's take it back here. Okay, let's take out this away now, guys. Let's see. let me take out all these ones. Let's take out this away so we can see clearly. Okay, so guys, last week on the GJ, this was the pair which we took that crash landed. Okay, now I'm going to explain to us what happened. Okay, now you can see clearly, right? We had a C1, right? We had a C1 and a C2. Okay, the C1 gave us a wick. And also, before I start, okay, the GJ, the GBPJPY had same scenario as the EURJPY. Okay, it was an uptrend market as well. It had higher highs and higher lows, which means the market wants to sell. Okay, we want to see the market come to the downside. That's the initial plan. We want to see price fall. Okay, that's the initial plan. As I always say, when you see higher high uptrend market, we're looking to sell the market. So the predetermined or predefined part of this pair was to sell it. That's the initial plan, to sell this pair. Okay, so that's why you see we have this here. Okay, that's why we see we have this downside short setup. Okay, for us to sell this market. Okay, so now let's move here for the explanation. Okay guys, so this is C1 and C2. I remember when you see a C1 and C2 in an uptrend market, it means the market wants to sell, right? So now we saw a C1 here, okay, and we saw a C2 here. Okay, that means the market wants to sell, just as we saw in the EURJPY. We saw a C1 and we saw a C2. That the C2 is a confirmation of more downside. Okay, we saw that in the EURJPY. What happened? The market fell and we won that pair, right? Why in the GJ? Okay, in the GJ we saw price give us the same thing the EJ gave us, a C1 and a C2. Now let's take a look and see what happened. Now we saw a C1 with a wick, a bearish body, and a short wick below, which is a valid candlestick formation. That gave us a C1. We waited and we saw a C2, okay, which gave us a wick, a long wick above, and a full bearish body with a short wick below, which means the market wants to sell, right? C1, C2 means the market wants to sell. So we put a sell, okay, for this trade. So now we put a sell at this level. Okay, put a sell at this level to push the market down. Okay, you put a sell at this level to push the market down, okay, to the downside. So now how do we measure and get our TP1 and our TP2? Just as we did on the EJ, the EURJPY, we need to go to the predetermined or predefined TP, which we have set at the start, which is this one, okay, which we have here. Look at the percentage. We always look at the percentage to calculate our TP1 and TP2. Okay, now the TP1 we have 4.61, right? 4.61. Now we take our calculator again, and as we did for the EJ, the EURJPY, we had to divide the 4.61% into 4 times. Okay, 4.61 divided by 2 4 times, right, for us to get the total and divide that into 2 to give us TP1 and TP2, just as we did for the EJ. Okay, so now we're going to be doing that now. 4.61, okay, divided by 2, right, 2.30. We divide it again. Okay, we need to divide it again. This is the 3rd time. Now the 4th time, divide it again. Now we have 0.28. okay, now we have 0.28, which means this is going to be our TP2, okay, because after dividing the 4.61 4 times we get 0.28. 0.28 means that should be our TP2. So to get our TP1, we need to divide the 0.28 into one place. That's going to be, if you divide that into 2, you're going to be getting 0.14, just as we got in the EJ, right? That's 0.28 for the TP2 and 0.14, right? So good. So guys, now we're going to put 0.28, okay? So now guys, let's set it up. So now we're going to be taking our entry from this level short. We're going to be taking our short from this level here. Okay, we're going to take a level from here. We're looking for 28. No, we're looking for 0.14. That's TP1. So we're looking for 14, which is here. Okay. Which is here. Okay, good. That's 27 pips. Okay, you can see we're almost there. Okay, but we didn't get to our TP1. Right now, let's go ahead and put our TP2. Let's clone this one, same level. Okay, that's where we started with our entry. Now we're looking for, just mind you guys, I want us to look at the percentage. Okay, you can see on the TP1 we had 0.14%. that's 27 pips, while on this one we need to be looking at 0.28. so I'm moving it down to 28, which is almost 50 pips, I guess. Yeah, 50 pips. 28. Yes, 28. All right, now you can see the TP1 was 27 pips, while TP2 was 53 pips, right? Okay, and if you look closely, you can see market didn't go there, right? We're gonna come to that in a moment. Now let's look at the stop loss. Okay, this is where I want to really explain to us our stop loss, and also differentiating the stop loss, and also differentiating the PSL, the SL and the PSL. As I explained before, the stop loss is of course where you don't want the market to get to. If the price get to that level, it's going to stop us from our trade or our position or our orders. Okay, while the PSL, as I said before, it's a psychological zone or level where if market gets to and breaks it, okay, it means market really wants to change hands. Okay, so that's what the PSL do. Okay, when I set it on the PSL and market gets there, it shows that that's a sign that the market really wants to keep on going further up. Okay, so now by right, okay, we're to put our stop loss on the second, on the C2, right, just above the longer wick above. Okay, that is where we're supposed to be. Okay, this is where our stop loss supposed to be. Okay, on C2, right, C2 candlestick formation, our stop loss should be above that wick, this wick. Okay, this wick, all right, this one. Okay, it should be above it a little. That's where you see our stop loss is, right? Okay, now this is what this high is going to be, right? That's why sometimes I say our stop loss sometimes are very wide. This is an example of what I mean by wide. Okay, so price would not come towards this side. Even if price comes to this level, we have that our system that kicks in, that if we get another candlestick formation along the line, it's going to maybe change to show us that the market has shifted or changed hands. Then we can close in loss to minimize loss. Okay, so that's another system which kicks in anytime there is a shift of hands or a change of hands, mostly when we have wide stop losses. Okay, we're always looking for that system to kick in for us to either get out of the trade instead of losing more. Okay, all right, so guys, let's see. Now you can see this is the plan. Okay, this is how I gave us on Thursday. This is what I wanted to see. I wanted price to come down towards this level, okay, for TP1, but price came towards, but unfortunately it didn't get towards that level, and too bad, we were sleeping, we didn't know what was happening. It was at night, so price almost got there, but bounced and did whatever I wanted to do, right? Price didn't get to TP1, neither did get to TP2. Okay, price kept on going up at night throughout the midnight till morning, and when we woke up we saw that price has kept on going higher. So now what I did again, okay, was to increase the stop loss. Now this is the PSL which I'm talking about, the psychological stop loss, which I explained a few seconds or minutes ago. Now I had to increase this one, increase the stop loss, okay, towards the previous towards C1, the first continuation, this one, that's this particular one here, okay. This is the candlestick formation which gave us this is a valid candlestick formation, the C1, okay. I had to move stop loss towards this level here, okay, towards this level, towards the C1, okay, towards the C1, guys, okay. I had to move stop loss towards that level. From here I had to move it from the C2 candlestick formation up to the C1 candlestick formation. This place here is our PSL, okay, PSL, okay, also known as psychological stop loss, okay. I call that as well, okay. And if you see clearly, you can see market came higher, okay, came higher and also broke this level. Market came and broke this level, okay. It broke our PSL level, and if market can come and break our PSL level, that means the market really wants to keep on going higher, except otherwise. But if it breaks it, because I've seen this happen many times, if price comes towards a PSL zone or area which I've set and breaks it, it means the market is not satisfied, okay, still wants to keep on going higher. And if you see clearly, that's what the market has been doing since this week, right? On Friday we saw all this chunk happening, okay. On Friday we saw all this happen, okay. On Friday we saw all this happen, okay. We saw all this happen on Friday. And what happened today, no, on Monday, which started here, okay. Monday started with this green candle. Since Monday, the market has been rocketing up higher, okay. Market has been going higher since, okay. So that shows you that the PSL is a very, very strong zone which the market respects almost all the time, okay. When the PSL has been set and market comes to that level and breaks it, it keeps on going higher, okay. That's how we know that the market has really shifted, okay. Right. So now guys, now we can understand how I set my take profits, my TP1, my TP2, and also how I set my stop loss. And also I've also explained the stop loss, the SL, and also the PSL, okay. The stop loss is just an area where you don't want price to get to, but if price get to that level, it's going to stop us out and save us some kind of, you know, breathing space. But the PSL, if price gets to that level, okay, it means truly the price wants to keep on going higher, okay. So that's different between SL and the PSL, okay, on my strategy, okay. So I think guys, that's that for this video. This session is just to make us understand how to set up a TP and how to know the PSL and also the SL, how to set all this to understand how it works, okay, and also how to set your Fibonacci retracement tool. I've shown us my parameters which I use. You can put it on your own to also see it move, okay. Don't forget guys, today is Tuesday 18th, third week of March. We are still yet to see any trade to take, but we are still hoping to find, because at the moment you can see UNZD is still we're still very much watching it. We want to see market come towards this level here for us to start looking for either a buy or sell, okay. We're looking and hoping very soon. And the USDCHF also, it fell like crazy, okay. It fell like crazy, but we are still looking to see a candlestick formation which will give us a C2, right. We want to see a C2 for us to push the market to the upside. So for now, we are in the waiting room, waiting for our turn for us to take our shoot, Okay, so guys, I think that's that for this session. I'll see you guys around on the next video. Please subscribe, and KCFX out, guys.